This is Alan Bush with ADMIS with the Financial Futures Forecast for Thursday, May 28th. In the stock index futures, first of all, we did see good gains yesterday on reports that talks between Greece and its Eurozone creditors had made progress, although some of those gains given back later on reports that, in fact, there may have not been much progress made in those talks. Also today we are seeing lower prices. The feeling now is that it may take several more days before an agreement is reached. Also, we had pending home sales coming in with good gains. That, ironically though, was considered to be a little bit bearish for stock index futures based on how it might affect Fed policy. So a stronger economy implies that the Fed might be a little more aggressive in raising interest rates. So a little pressure developing with that pending home sales report. Our feeling is, though, that we will probably see a recovery later today, and I would not be surprised to see futures trading higher on the day. Long term, we still think higher in stock index futures. Now, moving over to the currencies, the dollar index firming today. The flight to quality buying that we have seen in the dollar seems to persist as the talks between Greece and Eurozone creditors continue. Now, Greece has to make a payment by June 5th, so that appears to be the deadline. So we have to ask ourselves, why would either party be interested in any serious negotiations until we get closer to that deadline? So with that in mind, we will probably see the dollar index remaining firm and the euro currency under some pressure over the next couple of days. However, I do believe we will see some type of an agreement just before that June 5th payment deadline. And I think that is the time when the dollar will probably top out and head lower again after an agreement is reached. So we do think that there is some type of agreement that will be reached. So between now and then, the dollar will probably hold up relatively well. The euro currency will probably remain relatively weak. Also, we did see some pressure in the pound. This after GDP in the UK coming in higher but a little bit weaker than expected. Also, you have the yen trading at a 12-year low against the US dollar. This after retail sales in Japan showing an increase, but a much smaller than expected increase. Now, moving over to the interest rate markets, we do feel that the short end will remain very well bid. We also believe that the Fed will probably be forced to delay a rate increase, which is very much counter to the consensus view. The majority of analysts think that we will see a rate increase in the third or fourth quarters of this year. Even the financial futures markets are predicting that there is a 60% chance that the Fed will raise by their December meeting. Our feeling is that they may wait or may be forced to wait until next year. In any event, the front end should be very well supported. I think I'd avoid the longer end, the 10-year and 30-year issues, but the short end of the curve, I think, will continue to remain firm. And if you are going to be in this market, I would be long the front end, but not the long end of the curve. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.